What climate change needs and what the insurance market needs is collaboration between innovation in tech, which Mitiga represents, and the expertise which HDI is able to deliver to those end clients. I think that collaborative approach will yield better adaptation and mitigation results, far better than a siloed individual approach that we may otherwise take.
Hi everyone, welcome back to the Instech podcast. We had the team down in New York this week, which had far better weather than what we had in the UK. They say we're in for the wettest summer in 100 years. This is quite pertinent to this week's podcast episode, which is an exciting release. We have both Mitiga and HDI Global together on the podcast to talk about everything to do with climate risk. This includes the services Mitiga provide with their EarthScan platform, the evolving landscape of climate risk management for various industries, and how insurers can successfully collaborate with the technology firms that are driving innovation today. Joining Matthew is Jonathan from Mitiga and Wiebke from HDI Global. Over to their discussion.
John, Wiebke, great to have you. Always, of course, enjoy doing the podcast, but I particularly like the ones where we've got an insurance organization talking to a technology partner that really brings it to life. And this topic we're going to talk about today is actually fascinating. So, John, I think you're calling in from the UK, is that right?
I am. I'm calling in from sunny East London this morning.
Brilliant. And Wiebke, I'm guessing somewhere in Germany today, are you?
Yes, luckily also sunny. I'm calling in from Hanover in Germany.
So first of all, a little bit about Mitiga. So you were founded back in 2018. You're providing climate risk intelligence that's helping companies analyze, report, and act on their exposure to climate risk, both at asset and portfolio level. Basically what I've seen, been doing a lot in the last 5 years. You've got a platform called EarthScan. We're going to be hearing a bit more about, and some risk models and the perils just now, including flood, droughts, and extreme temperatures. So John, we'll talk a bit more about that in a minute, but also wanted to talk about HDI. And I'm delighted, Wiebke, you're the second person from HDI we're talking to in a couple of months. So we had Verena Brenner, episode 296, talking about HDI Thinks. Really intriguing organization. I don't know if people know quite how large you are. Part of Talings Group, you're providing insurance solutions to industrial, corporate, retail clients. You've got a presence in over 175 countries, 5,000 employees, and I see that you got revenues, according to your own press release, of 9 billion euros in 2023. Is that a fair representation of HDI? Anything else you want to add to that?
Yeah, I think we're growing and wanting to be one of the big and main commercial insurers. And yeah, definitely worldwide presence, worldwide colleagues, and worldwide busy.
Worldwide busy, I like that. And so, John, back to you on Mitiga. That was a very brief summary. Anything critical I missed in there, or you want to update us on?
Yeah, I think from our side, our main focus at the moment is purely on climate risk and climate risk analysis for customers around the globe as well. We are lucky enough to be able to serve customers all the way from Western Canada across to South Korea, which certainly keeps my mornings and evenings very busy.
I don't want to get into political discussion, but we've just announced, or the government has just announced the election here in the UK, and climate is going to be a big part of what's in the manifesto. And I feel this area is starting to get very real for many of us. So you can see that's partly what's driving Mitiga's growth. John, just for you, first of all, your customer success lead for Mitiga, but just picking up on that description, if you're going to summarize exactly how you're helping clients, what's the sort of one thing above else that they're coming to you for help with?
What we're talking about is being able to help you understand the risks posed by climate change, how much hotter, how much wetter it will get, how much drier it may be, depending on where your assets are located around the globe. We're also happy to help with mandatory reporting, because over the last few years, there has been an increasing pressure on businesses, not just in insurance, but around the world and across industries, to start reporting on climate risks that they face. And finally, it's about helping people get ahead of the game, especially in the financial world. When you're investing or you're looking at insuring assets, you want to make sure that climate change is a part of your analysis over the lifespan of your investment or your insurance period. Essentially, you want to get ahead of the game when you're performing your due diligence.
Great. So I'll just run back past those three, John. So first of all, you describe what I hear increasingly referred to as decision-ready risks. So you're basically helping people make that critical decision more easily. Secondly, talking about what's happening with regulation. And I'm glad you didn't start introducing acronyms in there. Two of you know the rules for the Instep podcast. If you introduce an acronym, either you or I have to spell that out. So as we start talking about all those very long acronyms for climate, please let's make sure we just spell those out as we go. And the third one is around due diligence and for both parties in transactions, making sure they really understand what the climate risk is going to be both now and in the future. Wiebke, just coming to you, it's great to be talking to you on the podcast. You've actually been to London, you've been at our events. You are a risk engineer. I'm always happy to see other engineers. That's where I started my career. You're also involved in natural hazards, but I'd love to hear a little bit more about what your role is at HDI and how you ended up doing what you're doing today.
I work for a group that's called HDI Risk Consulting, but we're fully working for HDI Globals. We're the engineers, the risk engineers working for the HDI Global Group. And we have 180 worldwide. And I am purely focused on natural hazards and climate risks. And I have been doing that for the last decade. And typically my job was to work on the natural hazard exposure and then to help clients mitigate the risk. You know, if they have a flood risk, what could you do in order to lower that, to make sure that your site can keep processing and working? So in the past, the topic was typically natural hazards and using historical data to assess the exposure. And what happened over the last years is that we're, on the one hand, because of our own motivation, looking into the future, but also because our clients are coming to us and saying, hey, how can we actually prepare ourselves and our sites for the future and what climate risks are expecting us? And this is basically how it turned from not only the status now, natural hazards, to what is actually going to happen in the future because of climate change at our site. And how can I make sure that I increase my resilience for all these risks?
I noticed you also in April, you announced the release of your climate risk reporting service, which is what you're referring to. There's also a link that we'll put in the episode notes, which actually is a very helpful summary of this as well. So anybody who wants to dig into that a little bit more, you can find it in the episode notes. John, I just want to come back to you a little bit on, just so we just get a head around the sort of data you're providing and how that all comes together. So since Mitiga has been formed in 2018, what's the balance between creating the data yourselves from first principles versus your collaborating with third parties to bring this together to offer to people like HDI?
So I think the common misconception when you look at climate risk is that the climate risk providers out there are creating the data themselves and it's like first party data. When in fact, there are fantastic data sets out there, which are third party, but are global in nature and therefore very difficult to understand at an asset level. So I'm going to introduce an acronym. Sorry about that, Matthew. But the first one, which I'll talk about, is the IPCC, and that's the Intergovernmental Panel on Climate Change. Essentially, what that is it's a consortium of scientists around the world, which helps produce analysis on the effects of climate change and what is likely to occur across the 21st century. We utilize that data. Often that data is global in nature. It's at huge resolution. We're talking hundreds of squares of kilometers across. So it's not exactly useful if you were to look to provide insurance for an individual asset. Where we come in is we step in and we downscale that to an asset level of usefulness. And that's really where the difference is. I think we can take that best in class science and we downscale it to that asset level. We do that for precipitation, so we can see how much rainier it will get across the globe. We do it for heat stress, wind risk, flooding, wildfire, and increasingly more and more risks as well. So we're confident that as a provider, we can work with large insurance organizations like HDI and provide them that best-in-class science in a very timely manner. Previously, you might have to wait months to be able to collate this data and be able to serve it. We have a platform called EarthScan, like you've previously mentioned, and we can serve it to you within seconds on an asset-by-asset basis.
What was the background behind the company being founded in 2018?
It was founded by our CEO and CTO, Alejandro Marti and Mauricio Hanzik. They're both based in Barcelona. In fact, as a company, we're based in Barcelona. And they both work together at the Barcelona supercomputer, a place called Mare Nostrum. Their background is largely in catastrophe modeling. But when you work in catastrophe modeling, as Wiebke has already highlighted, it kind of naturally leads on to climate modeling and the effect climate change will have on these catastrophes. Previously, catastrophe modeling has been about predicting the future based on historical events, but you can't predict the future on climate change based on historical events, basically by the nature of climate change. There are going to be multiple different scenarios. There's multiple different inputs. It's very difficult to be able to ascertain what the future will hold when it comes to natural catastrophes. And to not include climate change in your analysis could potentially mean a loss of millions for your assets.
Yeah, I mean, and it's an issue I'm personally very familiar with, having spent 25 years in catastrophe modeling and working with the teams that were making those difficult decisions about how to incorporate potential future climate changes in the models. And so as you're talking about that element of the modeling, can you talk a little bit about the distinction? And Wiebke, I'll come and ask you the same question. As you're reporting on climate for your clients, the way I tend to characterize it, you've got the next 12 months, which basically impacts pricing. And then you've got longer term climate change, which is ultimately going to impact pricing. But there's a whole different reason for looking at that. You mentioned like regulatory reporting and other things. But in terms of how you're providing that information and how you think about it, do you distinguish between the sort of the 12-month climate, and it's actually often it's climate volatility as well, not just climate change, as well as the longer term impacts?
Yeah, so EarthScan, we've done this with HDI across multiple assets, right? You can look at 2020, 2025 to get a sense of what the current risks are, but you can go all the way over to 2100 throughout the 21st century across all of these different risks. But within that, what we incorporate is scenario analysis. So we look at 3 different types of future. We call them business as usual, emissions peak in 2040, and a Paris-aligned future. Each one of these represents a different type of climate future, which is modeled again across the IPCC. But what we also do across that is we also show the variety of outputs that you can get from the multiple models which we do use. So across heat stress, we provide an average, but we also provide a 5th and a 95th percentile across what those analyses say. The reason for that is because the future is inherently uncertain, as are each one of these scenarios. So it's important that we provide that data to customers. And also, frankly, it would be disingenuous of any climate risk provider to say, this is what's going to happen. We're based in science, and we want to make sure that we are providing what science is currently best saying for your assets. And that means that we have to provide that variety.
I just want to come back to those 3 scenarios you put in there. The first one was business as usual. Can you just reiterate what the other 2 were?
Yeah, sure. So business as usual is quote unquote the worst case, but we also include 2 other scenarios. The second of which is something called emissions peak in 2040. Fairly describes what that scenario looks like. Emissions don't go much, they peak in 2040. And then there's Paris aligned, which is the quote unquote best case scenario.
Great. Okay, that's very helpful. The first one is, we're in trouble one. Second one is, let's see what we can do. And the third one is, okay, let's really all get behind this and make it successful. Wiebke, how does that fit with what your thinking is at HDI as you look at the different outcomes?
Yeah, look, for us, the data and the way we get it from Mitiga is a perfect fit. We have in the past, and we're still using it, certainly, like you say, for assessing exposures, for portfolio modeling, for premiums and everything. We have our in-house tool, and we have natural hazards data there, but it's based on the historical events, on historical data. And what Mitiga does for us now is basically they click onto that almost like a puzzle piece. And with them, we can say, this is our data from the past. This is the historical data, status now. And Mitiga helps us to go forward into the future. But of course, like we just discussed, it becomes more complex, right? You don't just have one time, this is the situation, these are your exposures. But suddenly you go forward and you say, based on the scenario and at different points in time, this could be your exposure. Plus, you have an uncertainty with the percentiles. So you add in complexity, but overall, if you want to look at it, Matthew, it's for us a puzzle piece from status now based on historical data to what is going to happen into the future. And I don't know if I should go into that, but you mentioned how does that fit with premiums with insurance? Honestly, mostly for the insurance at the moment, still these historical data packages are used, right? But our clients themselves are intrinsically motivated and interested in what is happening in the future. So it's really a separate package that we can offer them, and a service and a support to increase their resilience for the future and to help them look at old and planned new sites, to help them be ready for possible flooding, heat stress, and all these risks.
A really important distinction. Just to make sure we talk about that for a bit. So what you're saying is when it comes to pricing risk, at the moment you're doing it's called the traditional way. It's traditional, but it's still using models. So it's still sophisticated. I'm sure from the portfolio point of view, someone's looking at what that means to your overall exposure. But that's one side of the business. And then now you're starting to also look at how you help your climate clients. And I think this is where your climate risk reporting service comes in.
Mhm.
Help them understand what the future could look like, and importantly, help them understand how they can mitigate that. So this service, climate risk reporting, that's evolved fairly recently, hasn't it? As something that you're not actually offering to your clients, as something they can get from HDI.
Exactly. We have over a couple of months developed it and tested it with pilot clients. But since April, it's an official service. So what clients can get from us is a site-specific assessment of climate risks. And then, as John said, we do it for 3 different climate scenarios and for 3 points in time. And that is purely a high-level screening, Matthew. This climate risk reporting is high level. It's really the exposure and it's some general adaptation measures. And this is aimed to fulfill the regulatory requirements. So, for example, our main office sits in the EU. So we looked at what the EU was asking, the EU taxonomy, for example, but you can also use it for other regulatory requirements. So this is a really high level thing. But for us, what's important is that we don't want to stop there. We are also already working with a couple of clients and definitely want to extend that to start this high level screening. What is my exposure? And really dive down into discussing what could this mean for your site. So what could an increased heat or a drought situation and a lack of water, what would this do to a specific site and to your production processes? And then you go into the consulting, into adaptation measures. So what we offer now is the start. It's for regulatory requirements. And for me, it's always the starting point to go deeper.
And then secondly, what would example of the kind of issues you mentioned, for example, heat stress, that they would be concerned about, and guess why, and how does that get measured?
Yeah. So maybe for the clients to take away this big topic and what do I actually need to do? John also always describes it very nicely. All we need basically is the location in the world. That's really the starting point. At the beginning, we don't need much more. We just need to pretty much precisely know where they are so we can actually figure out the exposure. That's the starting point. That's what I always say. You don't need to do much more. Give us your site. Then, with the help of EarthScan and Mitiga, we do the screening for the exposures. So, I know I always use exposure and all these technical terms. So, what it basically means, what risk am I actually exposed to? Because, as you can imagine, if I don't have a wind risk, I don't need to dive deeper, right? So, you first say, what could actually be a problem? It really depends, of course, on the process that the client has at that location. That's very important to understand that. But just to give you some examples, we've been looking at different topics. So we have been looking with clients at the topic of groundwater wells. They have, for example, extracted water, processed water, or cooling water from groundwater wells. And the question was, imagine a long-term drought. I mean, John and Mitiga, they're sitting in Barcelona, and it's a very much topic at this point. It's not something that you could imagine. It's actually happening. So you have a drought, Matthew, and then you could look at 2 different things. On the one hand, what if this well falls dry because the groundwater, because of this drought, is too low and the well is not reaching it? You actually don't get the water. And then we ask our clients, what does that mean? What happens to cooling, to process? Do you have alternatives? These redundancies, as we always talk about. Could be topic number 1. Topic number 2 in this respect could be, I have the water, I can still reach it, but suddenly the government says because of drought and lack of water, everybody has to lower the usage. And that could also hit industry. I mean, Usually it's first your private pool, right? That's where they go at first. Please don't fill your private pool. But when it becomes a very critical point, the government might also ask the industry to lower by 20%. And if you talk to clients about that, you can really see they're like, oh, 20%. That is quite something. And then we dive in and really say, what are the points you need to look at and what could you actually do? And I must say, Matthew, what I really had to learn is I'm coming from the engineering side and I go there. And most of the time, I have an idea or a solution or a suggestion. But to be honest, now we're coming into topics that are new for everyone that we haven't done for 10 years. You know, you're also an engineer. Some things are just easy and you've done them. And it is fascinating, but also very exciting because suddenly we're really partners of our clients. We really discuss together. And it's not the insurance coming there saying you have a problem, you have to do something. I really sat with clients and we just discussed for a whole day what could happen. And they said, oh, I wasn't aware of that. That's a good point. And then they came with their very specific location expertise. And that, yeah, it's also actually exciting. I know it's very scary for all of us, but I think there's a lot of potential in collaboration between us and Mitiga, us and our clients. It's a very exciting time also.
I couldn't agree more with Wiebke, actually. What climate change needs and what the insurance market needs is collaboration between innovation in tech, which Mitiga represents, and the expertise which HDI is able to deliver to those end clients. I think that collaborative approach will yield better adaptation and mitigation results, far better than a siloed individual approach that we may otherwise take.
And are you seeing that example elsewhere, John, across other companies you're working with, other insurers?
Absolutely. We work with not only insurers, but we work with infrastructure investors as well, and multiple players across the financial space. We even work with a couple of mining organizations as well. The main thing to mention here is that when it comes to work with our infrastructure investors in particular, no organization is an island. They work with multiple different suppliers, providers. They will want to understand the wider networked impact of climate change on top of that as well. That collaborative approach is fantastic with HDI, but it's certainly not the only collaborative approach that we see with customers. And I think it's necessary to be able to understand the full impact that climate change could have on our assets around the world.
And Vivek, I want to come back to the decision at HDI. So it sounds like a great thing to do for lots of reasons. What was the process, though, within HDI that your colleagues, and I guess it was the board, decided to do this, and then they had to decide how to go and do it? Can you just explain that a little bit?
I would say lots of small different reasons. Of course, us in this natural hazard climate risk team, of course, you see what's coming somehow, right? And you think, what could we do? Then we got approached by a couple of clients themselves. So it was our intrinsic motivation and realizing we need to look forward, not just backward. Then the clients asking for help because often what we heard, Matthew, is, hey, but you have all this natural hazards data. You always use it for modeling and for the screening. Can't you do climate risk? So that they approached us. And then we also had contact with the financial world. So really with sustainable finance professionals and talked to them. And they looked at our Argos system and they said, yeah, but if you have like our internal natural hazard system, they said, if you have climate risk in there, you could fulfill regulations, you could help people. And then it became clear that also on this regulatory market, it could be helpful what we're doing because all the regulations, a lot you can do themselves or the clients can do themselves. So, for example, can the client say, what's my CO2 footprint, cars, flights, energy, heating? But this little part of climate risk, they can't do. They tried to look locally, what kind of data is there, but realized it's actually very difficult and needs a certain expertise. So maybe to summarize it or to say it was internal motivation, it was requests by clients themselves, and it was actually also talking to different professionals from sustainable finance to realize this is important and we should dive into it. And then we looked at what data source we could use because also our internal natural hazard system, we are not making the hazard maps ourselves. It's also not our expertise. We're more the engineers using the data and then going forward. So all the data has already been either bought from companies or it has been taken from publicly available, but always scientifically sound sources. And in the same way, we proceeded now. We looked at what providers are in the market, of course, tried to get a feeling, can we trust them? What do they use for their modeling? What kind of people are working there? And what data do they deliver? And maybe to cut that short, what really convinced us of Mitiga were, I would say, 2 to 3 points. So number one is we really enjoyed working with the people. I know people are maybe like, why is that your first and important point? But I find, Matthew, to have a trust, to trust these people, to talk to them and really think they know what they're doing. I find that is so incredibly important because I base my analysis on that and I talk to my client based on that data. And the openness, whenever we come and we say, hey, we learn that the client has a problem with humidity, can you somehow get the data to us? It's not yet in there. And then John offers saying, well, we could actually do that. Let's look into that. This openness, this working with us, it really felt almost more like we're colleagues rather than we're just getting the data as a client. Very important point. And maybe the second most important point.
I'm blushing, by the way.
And the second point is that Mitiga via EarthScan delivers us very granular data. So I don't just get a rating for a location, it's A, B, C, D, F, but I really get granular data. I get the information about how is the wind speed changing or how many more heat days do I have and how long is this heat wave going to take and how hot is it going to get. So we really get granular data, which helps us to do consulting because without granular data, I can't go into the consulting, as you can imagine.
Fantastic. John, I just want to come back to you as we're talking about EarthScan and how HDI are using it. I'm starting to try to get my head around how does someone use that in practice? So you've got a client, maybe it's Wiebke. These days, people are all trying to integrate systems together. How does EarthScan talk to other data systems or analytic systems that people are using?
Yeah, so right now, EarthScan is its own self-serve platform that can be accessed by any browser that you wish to use. There is no user limit within HDI. Very happy for as many different risk engineers to join and analyze climate risk. Where we're moving towards in the future is an API with HDI is helping us develop that as well, very kindly. We are very much moving towards the API route, primarily because that's how you enable risk at scale. When Wiebke talks about granularity, that is, it can be up to 21,000 data points per location. So trying to serve that on the internet at a second's notice, it's not scalable. But an API enables that granularity at scale for climate data. HDI and Wiebke are really big proponents of that because it only helps them in the long run. And I think that's where we are headed in the future.
Great. And then on the commercial side, so back to you, Wiebke. So your clients are asking you for this. There's clearly work involved. There's an IP from Mitiga. How does that work on the cost or charging back to your clients providing the service?
Yeah, at this point, Matthew, it's usually done in a way that the client pays for it as a separate service. And yeah, I can say that's also well accepted. They really see it as a special request that is not necessarily linked to our insurance product. So we get a request in, we usually send an offer often directly to the client and just do the work almost like a consulting firm and then do the billing. So that's usually a separate service, which is separately charged to the main insurance part.
Encouraging to hear because these things are difficult to sustain. You're trying to just do them out of underwriting or other ways. And clearly there's a lot of information in there that's very valuable. And then, John, clearly a lot of really valuable insight here. Some of this you get from third-party data, but you've got to basically bring it all together, process it. What's the sort of funding behind Mitiga and how do you pay for all this?
Well, yeah, you're right. It's not without its hundreds of thousands of hours of dedicated work, right? So that's from data, climate scientists, as well as product specialists. We've just increased our Series A round to over 20 million euros, which makes us one of the best funded climate tech startups currently within Europe.
Excellent. Oh, congratulations on that. And it's good to see the funds are starting to be made available again. And then before we just wrap up, I'd like to have you both as core members of Instech. John, what is it that sort of motivated Mitiga to support Instech and what we're doing together?
Beyond talking today, I think insurance is ripe for innovation, right? And it's what Instech provides us with is the perfect platform to be able to talk about the innovation that we can provide to the industry.
Great. We'll demonstrate that with all the thousands of downloads the podcast gets, John. And Wiebke, we're also
Fantastic.
delighted to have HDI and as support from lots of your colleagues. You've been a big supporter along the way. You come across London to our events. And what is it about what we're doing at Instech that you like?
I think we touched on it already, that just as an example in this climate risk field, but so many other fields, I think it's very important these days to collaborate. And I find, for me, Instech is two things. It is a support to network and to find networking partners and to get together from different areas. And the second thing is also knowledge. I get your newsletter, I listen to your podcasts, and so often there's something that I learn or that I think, oh, I need to look that up more deeply. So it's really two things. It's networking and knowledge.
Fantastic. Thank you. It's good to know it's working. And then Wiebke, whilst I've got you, for anybody who wants to learn more about climate risk reporting or what you're doing at HDI, what's the best way to define that?
Find me personally, Wiebke Cundill. You can do that. Or I know we're also going to provide a link to our press release where you can learn more about climate risk reporting. And there you will also find links to our team and contact information. And of course, via the HDI Global website.
Great. And actually on Instech as well. And then John, for you, anybody wants to learn more about EarthScan or Mitiga generally, what's the best way to do that?
Yeah, sure. The best place to head is earthscan.com. You can find me on LinkedIn as well, but much more preferable to go to earthscan.com, where you'll be talking to some of our climate professionals and understand some of the fantastic use cases which we've already unearthed with some of our customers.
Fantastic. It's been a really enjoyable discussion. I'm going to let you go back and enjoy the rest of the Friday. And I look forward to seeing you both face to face again soon. Thank you very much.
Thank you so much, Matthew. It was fantastic.
To reiterate Jonathan's words, collaboration is vital. Here at Instech, we believe in the collaboration of the curious. If you would like to join us, reach out to us on LinkedIn or head over to our website to see what membership and joining our community could look like to you. See you next Sunday.